Good day folks and welcome to Best Trade Setup. In this video, I'll be taking you through the trades from the 1st to the 2nd of April 2024. Right here we have a sell trade. I ended up increasing the stop loss just a little bit, not too much, and then price eventually reached take profit. So this is the 15-minute time frame. All of my trades are taken off of the 5-minute time frame. What I see here is a consolidation where we have a minimum of 4 inside candles inside this bullish candle. And when price breaks through these boundaries, I consider it a break of structure, which also creates order blocks. And that also helps me enter trades when I look at the confirmations. This purple box here is a no trade zone. I don't trade in this area. The vertical red lines show sell entries. If it's a vertical blue line, it shows buy entries. This is a wider view of the 15-minute time frame. Now, here's the 5-minute time frame where I took the sells right here. Now, this level of resistance below an order block, I only need 5 confirmations. Any other situation, I would need 6 confirmations. So what we have here is a fake out, and with every fake out is an M pattern or W pattern. So it gives us 2 confirmations. Why do I say an M pattern? Well, we have this first leg here, and then price goes up and then down, which forms the second leg. This fake out here is also in the form of an M pattern. Just look at the line chart, we'll see up, down, an M pattern. We also have price reacting off of this 5-minute order block. And then we have this 3-candle pattern in the form of 4 candles. Now a 3-candle pattern can be in the form of 4 candles, but not more. What we have to look at is how price starts off here and closes here, and therefore it forms a pin hammer, which is a rejection candle. So then for me to enter these cells, I need price to close below the 20 EMA. I really need price to close above or below the 20 EMA to confirm entries. Then we have price going up here, and then it eventually reaches take profit. Now, this green line here is a break of structure to the upside, showing a bullish bias. So moving forward, instead of looking for an M pattern or a 3-candle pattern to enter cells, I need to restart the count and look for 6 or 5 confirmations, depending on how price plays out. And in this case, I need 6 confirmations. So what I have here is a sweep M pattern in the order block area, 5-minute order block area. Price goes down, comes back up again, creates a sweep, an M pattern in the 5-minute order block area. So now I have 6 confirmations for sells, but as you can see, price didn't close below the 20 EMA up until this point, and that is when sells are taken, shown by this vertical red line. So what we have here is this break of structure right here. And then we see these 2 bullish candles going up, creating a swing high, and then price going below. So this is a significant level of which I can look at to enter sells. So now that we have sells confirmed here, I only look for an M pattern or a 3-candle pattern at this level. And in this case, we have multiple tops, which is fine, in the form of a head and shoulders. So sell entries can be taken once price is closed below this level. You could wait for a pullback to get a better risk to reward, where this is where your stop loss would be and your take profit right here. We have price again creating another opportunity for sells, where we have price creating a M pattern when you look at the line chart right here, and you can take sells here and your stop loss would be right above this M pattern instead of right here, and then price eventually went down. This is the line chart. This is a wider view of the line chart. You can also see that price did form a consolidation right here, broke out of the consolidation, retested it with the head and shoulders pattern, and then continued to go down, broke through this level, retested it again and pattern, and then continued to go down. Now here we have enough confirmations to enter buys, but what we need is price to then form a 3-candle pattern or a W pattern at this level to take buys going up. But since we don't have that, there are no buys that need to be taken. We have multiple bottoms right here, and then we have price closing above the 5-minute order block, which shows a bullish bias, but we need entry signals to enter them, but we didn't get them. So in that case, we just continue with our sells when price closes below this level, forming this triple top. So here we have sells confirmed, and the stop loss has to be above this area because this is a huge order block area on the 15-minute time frame. So the stop loss should be right here. As you can see in the first trade that I showed you, where price also had come all the way up here but then continued to go down. So it's very important to always put your stop loss above the order block area. In this case, I chose the 15-minute time frame instead of the 5-minute time frame order block. Price eventually reaches take profit. This is a one-to-one risk to reward trade. Most of my trades are a one-to-one risk to reward, and then depending on how price plays out, it could be a 1-to-2. Now here is the 15-minute time frame, just to give you a bigger picture of what's going on. And right here, you find that when we have trades taken from the low of the week, because this is Monday and then Tuesday, price most likely will reach the high of the day, which it did, and went beyond it, which is even better. On the 5-minute time frame, this is a rising channel, which also can show potential bullish movement. This is a 5-minute time frame. This is where I had taken the sells, and as you can see here, we have sells already confirmed. So moving forward, I'm only looking for M patterns and 3 candle patterns at significant points, as you can see right here and here and here. So in this case, I only need an M pattern, and I put the stop loss above here and take profit all the way down here. Right here is when price changes from a bearish bias to a bullish bias. What we see here is price going beyond this point right here, a break of structure showing a potential move to the downside. So I need 6 or 5 confirmations for buys. And what I saw was a sweep here at this level, which also gives us a W pattern. And then we have it reacting off of this quarter level. From this point right here to this point right here, price does a fake out, and with every fake out is a W pattern, and this fake out is in the form of a triple bottom where we have price going down, down, up again. So, and we also can see that price did close above the 20 EMA and it confirms buys. Price went back up again, came back down. And since we have buys confirmed, we only look for 3 candle patterns or W patterns at significant points. And in this case, this is the low of yesterday's low of the day, and buys can be taken from this point on. Price does continue going up. This consolidation below this resistance level shows potential buys, and price did eventually go up. This is the rising channel I was talking about earlier on. You can see that we have quite a number of pin hammers right here. On the second or even the third pin hammer, you can take buys to the upside, and your stop loss would be below this channel. This is something that I've seen happen many times. I will make a video about it, showing you more examples and how you can enter this trade. This also is a buy entry because price went above this level right here and created a W pattern. Now, this brings me to the end of my video. Take from that what you will. See you on the next video. Till then, cheers.